Glenn, can you step away from the computer for me for a minute?
Sure, we're trying to finish month end right now. Is something wrong?
Glenn Tanaka operated as the trusted accountant for the same family business for 20 years, with almost no independent oversight. $1.5 million later, someone finally checked.
We need to discuss several vendor accounts connected to company payments.
Vendor accounts, I handle hundreds of those.
He would not get the chance to explain it away. Within 96 hours, federal agents from the FBI's Sacramento field office would seize his work laptop, his personal laptop, 4 external hard drives, and a banker's box of paper ledgers he had kept in the attic of his home on Wisteria Lane. 10 years, 612 fraudulent invoices, $1,512,483 siphoned out of a family business that had treated him like blood. He had been to the patriarch's funeral. He had cried at it. Quick question. Would you let a friend you've trusted for 20 years touch your bank account? No questions asked? Drop your answer in the comments. And if you're not subscribed yet, now's the time. We cover cases like this every week, and accountability starts with awareness. Glenn Hideo Tanaka was born in Sacramento, California, on April 11, 1967, at Mercy General Hospital on J Street. His father, Kazuo Tanaka, worked for the California Department of Water Resources as a hydrology technician. A quiet job, a state pension job. His mother, Ruth Tanaka, was a part-time teacher's aide at Sutter Elementary School. The family lived in a 1-story stucco home on Robertson Avenue in the Tahoe Park neighborhood of South Sacramento. 2-car garage, lemon tree in the back. The kind of street where every adult knew every kid's first name. Glenn was a quiet child. School records from Sutter Elementary describe him as polite, attentive, and consistently above grade level in arithmetic. His 3rd grade teacher, Mrs. Doreen Halverson, wrote on his 1976 report card that Glenn remembers numbers the way other children remember songs. He kept his lunch money in a small canvas wallet his grandmother had sewn for him, and he could tell you, to the nickel, how much was in it on any given day. He attended Hiram Johnson High School from 1981 to 1985. He played second-chair clarinet in the marching band. He was treasurer of the math club for 2 consecutive years. The yearbook from his senior year shows him in a brown corduroy blazer and round wireframe glasses, ranked 7th in a graduating class of 312. Underneath his name, the yearbook editor had printed his quote, "I want to be the person you can count on." He enrolled at California State University, Sacramento, in the fall of 1985, declaring his major as business administration with a concentration in accounting. He worked part-time at a Round Table Pizza on Stockton Boulevard, balancing the till at closing every night and noting any discrepancy in a small spiral notebook he kept in his back pocket. He graduated in May of 1989 with a 3.81 grade point average and a letter of commendation from the dean of the business school, Dr. Marcus Pemberton, who described him as a young man with an exacting moral compass and a gift for clarity. He passed the Uniform CPA examination on his first attempt in November of 1990. He took his first staff accountant position at Pemberton, Croft, and Hannigan, a small regional firm with offices on Capitol Mall, in the spring of 1991. His starting salary was $26,400. His annual performance evaluations from those early years described him with phrases like exceptionally thorough, client trusted, and the kind of preparer who finds the mistakes no one else flags. He was promoted to senior accountant in 1993 and to manager in 1995. That summer, his life pivoted on a single client engagement. Pemberton, Croft, and Hannigan had been retained by a family-owned restaurant supply company in West Sacramento called Okamoto Restaurant Supply, Incorporated. The founder, Hiroshi Okamoto, was a 71-year-old Nisei who had started the business in 1981 out of a warehouse on Industrial Boulevard, selling commercial-grade rice cookers and stainless steel prep tables to the city's growing constellation of Japanese, Vietnamese, and Cantonese restaurants. By 1995, the company was doing roughly $9 million a year in revenue, employed 23 people, and was on the verge of expanding into Stockton and Modesto. The books, however, were a mess. Hiroshi did not trust outsiders, but he was getting too old to run the office side himself. Glenn was assigned to clean up the engagement. He spent 6 weeks at the warehouse, sitting at a folding table in the corner of Hiroshi's cramped office, reconstructing 3 years of receivables from cardboard banker's boxes. At the end of the engagement, Hiroshi offered him a job, controller, in-house, $48,000 a year, full benefits, and a Christmas bonus every December that Hiroshi delivered personally in a red envelope. Glenn accepted. He started at Okamoto Restaurant Supply on October 2nd, 1995. He was 28 years old. He would not leave that office for the next 28 years. He married Linda Sumida, a pharmacist at a Save Mart on Florin Road, in the spring of 1997. They bought a 2,000-square-foot ranch home on Wisteria Lane in the Greenhaven neighborhood of South Sacramento for $178,000 in 1999. 2 children followed. A daughter, Emma, in 2001. A son, Tyler, in 2004. He coached Tyler's Little League team for 3 seasons. He taught Emma to do long division at the kitchen table when she was 7, using napkin diagrams and a mechanical pencil he carried in his shirt pocket. To everyone who knew him, Glenn Tanaka was the man you wanted next to you when the numbers mattered. To the Okamoto family, he became something more than that. He became family. To understand what Glenn Tanaka did, you have to understand how a small family business actually runs. Okamoto Restaurant Supply was a closely held S-corporation. By the early 2000s, the founder, Hiroshi Okamoto, was in his late 70s and had handed day-to-day operations to his 2 sons. David, who ran sales and customer accounts. Mark, who ran the warehouse and logistics. Neither son had a business degree. Neither son could read a balance sheet. Both of them had grown up sweeping the floor of the warehouse on Industrial Boulevard, loading delivery trucks before school, and watching their father trust a single outsider, Glenn, with everything that touched a number. The company had no chief financial officer. It had no internal audit function. It had no formal board of directors. It had Glenn. Glenn approved vendor payments. Glenn cut the checks. Glenn reconciled the bank statements. Glenn prepared the monthly profit and loss statements. Glenn prepared the quarterly tax filings. Glenn worked directly with the company's outside CPA firm, a 2-partner shop in Roseville called Vincent and Lau, to prepare the annual tax returns and the year-end compiled financial statements that the family bank, Wells Fargo, used to renew the company's line of credit. The outside accountants did not audit the books. They were not engaged to. They were engaged to compile, which means they took the numbers Glenn gave them and put those numbers into the correct tax forms. A compilation is not an audit. There is no testing of source documents. There is no confirmation of bank balances. There is no verification that the vendors on the books actually exist. The bank did not audit the books either. Wells Fargo's small business banker, a man named Roger Vasquez, had known Glenn for 15 years. Each year, Roger received a clean, compiled financial statement, a clean tax return, and a covering letter signed by Glenn on Okamoto Company letterhead. Each year, Roger renewed the company's $2 million working capital line on the basis of those documents. Roger never visited the warehouse. Roger never spoke to David or Mark about the financials. Roger spoke to Glenn. The internal controls inside the company were the kind of controls that exist on paper and nowhere else. Vendor setup required, in theory, the approval of an Okamoto family member. In practice, every Okamoto who had ever been asked to approve a vendor had said the same thing. Just have Glenn handle it. Check signatures required, in theory, 2 signatures for any amount over $10,000. In practice, David had pre-signed a stack of blank checks and left them in Glenn's bottom desk drawer, because David was on the road 3 days a week and didn't want the office to stall when an invoice came due. Glenn had the books. Glenn had the bank access. Glenn had the keys to the office and the alarm code and the safe combination and the password to the QuickBooks file. and he had something the Okamotos had given him that no internal control could ever protect against. He had their trust. He had attended Hiroshi Okamoto's 75th birthday party at the Sacramento Buddhist church Betsuin in 1999. He had been a pallbearer at Hiroshi's funeral in 2014. He had been invited to David Okamoto's daughter's quinceañera in 2017 because David had married a woman from Stockton named Maria Reyes, and Glenn had sat at the head table. He had stood at the back of the church at Mark Okamoto's son's wedding in 2019, crying quietly during the vows. He was not the family accountant. He was the family, and the family does not audit itself. The first fraudulent invoice was cut on March 18, 2013. By that point, Glenn had been at Okamoto Restaurant Supply for 17 years and 4 months. He was 45 years old. His daughter Emma was 12. His son Tyler was 8. His wife Linda had recently been laid off from Save Mart during a corporate restructuring and was struggling to find a pharmacy position at a competitive salary. The Tanaka family mortgage was 11 years into a 30-year note. Tyler had been diagnosed with juvenile type 1 diabetes the previous fall, and the family's annual out-of-pocket medical costs had jumped from roughly $3,000 a year to nearly $17,000. Glenn's salary at Okamoto, after 18 years of steady raises, was $104,000. Federal investigators would later note that, in the 8 months before Glenn cut the first false check, his personal credit card balances had ballooned from $2,200 to $19,000. He did not steal in a moment of desperation. He stole methodically. On March 11, 2013, Glenn opened a business checking account at a Bank of America branch on Watt Avenue in the name of a sole proprietorship he had registered with the California Secretary of State. He called it Pacific Coast Logistics Services. He listed the business address as a UPS store mailbox on Power Inn Road, suite number 247. He listed himself as the sole authorized signatory, using his own social security number and his home address on Wisteria Lane. 1 week later, on March 18th, he entered Pacific Coast Logistics Services as a new vendor into Okamoto Restaurant Supply's QuickBooks file. The vendor description read, Third-party freight consolidation, outbound LTL. He coded the vendor to general ledger account 5210, freight and shipping. He cut the first invoice for $4,872.41. He cut the check, signed it himself using one of the pre-signed blanks from David's stack, and deposited it the next morning at the Watt Avenue branch. Nothing happened. No one noticed. No one asked. So, he did it again. By the end of 2013, Pacific Coast Logistics Services had been paid $41,000 by Okamoto Restaurant Supply. Every payment was under $5,000. Every payment was coded to freight or shipping or warehouse supplies. Every payment cleared through the legitimate accounts payable system. Every payment showed up on a monthly profit and loss statement that Glenn personally prepared and personally delivered to David and Mark Okamoto. In 2014, the year Hiroshi Okamoto died of pancreatic cancer at the age of 89, Pacific Coast Logistics Services was paid $87,000. In 2015, $112,000. In 2016, $138,000. The escalation followed a curve so gentle that no year ever looked unusual against the prior year. He added a second fictitious vendor in 2017, a company he called Delta Valley Freight Solutions, registered in Galt, with another UPS store mailbox and another Bank of America account in his name. He added a third in 2019, Capital Region Distribution Partners. By 2020, he had 4 shell vendors operating simultaneously, all of them coded to freight, shipping, warehouse supplies, or office expenses. The largest single year of theft was 2021, when the 4 fictitious vendors collectively received $192,000 from Okamoto Restaurant Supply. He also skimmed cash from receipts. The warehouse occasionally took cash payments from smaller restaurant clients, primarily family-run operations in the Stockton Boulevard and Florin Road corridors that preferred to pay invoices in person. Glenn was the only person who reconciled the cash drawer at the end of each week. Federal investigators would later estimate that he skimmed roughly $30,000 to $50,000 a year in unrecorded cash receipts. He recorded the corresponding sales as ordinary discounts or as bad debt write-offs. He spent the money carefully. He did not buy a boat. He did not buy a Porsche. He did not take his family to Hawaii. He paid off his mortgage in 2018, 9 years early, and told Linda he had finally figured out how to refinance to a 15-year note. He paid off Emma's tuition at the University of California, Davis in cash, 4 semesters in a row, and told Linda the company had set up a scholarship program for employees' children. He paid off Tyler's insulin pump and continuous glucose monitor supplies for 3 years in a row, and never put a single dollar of that on the family insurance plan. The rest of the money sat in a brokerage account at Charles Schwab, in his name, invested in a conservative mix of index funds and municipal bonds. By the spring of 2023, that account contained $861,000. The year-end financials he prepared for the Okamoto family were always clean. Profit margins held steady at around 6.5%. Freight expense as a percentage of revenue climbed slowly from 12% in 2013 to nearly 19% by 2022. But no one in the family knew enough about restaurant supply logistics to recognize that 19% freight on a regional distribution business should have raised an immediate alarm. David Okamoto, the older son, who had taken over as president after Hiroshi's death, looked at the bottom-line profit number every December, nodded, and signed the check for Glenn's Christmas bonus. He gave him $8,000 in 2022. Glenn cashed it. Hiroshi Okamoto had 3 grandchildren. The oldest, David's daughter Sophia, was a marketing executive in Los Angeles. The middle one, Mark's son Brandon, was a firefighter in Davis. The youngest, David's son, Kenji Okamoto, was a 26-year-old certified public accountant who had graduated from UC Berkeley's Haas School of Business in 2019 and spent 4 years as a senior auditor at KPMG's San Francisco office. In April of 2023, Kenji moved home to Sacramento to start his own practice. His father, David, who was 63 and exhausted, asked him to come into the family business part-time and take a fresh look at the books. Kenji said yes. He started at Okamoto Restaurant Supply on May 8, 2023, working 3 days a week out of a spare office down the hall from Glenn's. Glenn welcomed him. He bought him a coffee mug that said "Boss in Training." He walked him through the QuickBooks file personally, spending nearly 2 full days explaining the chart of accounts, the vendor list, the customer list, and the monthly close process. He told Kenji to ask any question, anytime. He told David, in front of Kenji, that having a real CPA in the building was the best thing that had ever happened to the company. He meant it differently than David heard it. Kenji Okamoto had been trained at one of the 4 largest audit firms in the world. He had spent 4 years sitting in conference rooms at companies far larger than his grandfather's restaurant supply outfit, ticking and tying documents, confirming vendor balances, testing journal entries for fraud risk. He did not look at the Okamoto books the way the family did. He looked at them the way an auditor does. In June of 2023, Kenji proposed migrating the company off of its locally installed QuickBooks desktop file onto a cloud-based platform called Sage Intacct. He told his father it would let David monitor the financials in real time from his phone. He told Glenn it would make the close process faster. Glenn smiled and said it sounded like a great idea. The migration began on August 14, 2023. Sage Intacct, like most modern accounting platforms, runs an automatic vendor validation routine when an existing vendor master list is imported. It cross-references vendor tax identification numbers against IRS records. It flags vendors whose mailing addresses match those of mail forwarding services. It flags vendors whose bank account routing information matches that of other vendors or employees. On August 23, 2023, the Sage Intacct migration report flagged 4 vendors: Pacific Coast Logistics Services, Delta Valley Freight Solutions, Capital Region Distribution Partners, Western Pallet, and Crate Holdings. The first three were flagged because their mailing addresses were registered to UPS store mailboxes. The fourth was flagged because its bank routing and account number matched a payroll direct deposit record already in the system. Glenn Tanaka's payroll direct deposit record. Kenji Okamoto stared at the report on the screen of his laptop, in the spare office down the hall from Glenn's, at 4:46 in the afternoon. He read it 3 times. He did not say anything. He closed the laptop. He drove home. He spent the next 2 weeks pulling canceled checks. He pulled signed invoices. He pulled bank statements going back to 2018, which was as far as the company's archived records went. He matched payment dates to invoice dates and invoice dates to vendor activation dates. He built a spreadsheet on his personal laptop, working from his apartment in East Sacramento at night, never printing anything, never saving anything to the company server. On September 7, 2023, Kenji Okamoto drove to his father's house on Land Park Drive at 8 in the evening and laid the spreadsheet on the dining room table. David Okamoto read it for 40 minutes without speaking. Then he said, in Japanese, the single word his father used to say when something was broken beyond repair. He picked up the phone and called the FBI. The case was assigned to Special Agent Caroline Mendenhall of the FBI's Sacramento Field Office, Financial Crime Squad, on September 12, 2023. She was a 15-year veteran of the Bureau, a former forensic accountant at Deloitte, and she had worked 19 embezzlement cases in the Eastern District of California in the previous 8 years. She read Kenji Okamoto's spreadsheet at her desk on the 3rd floor of the Bureau's office on Promenade Circle. She made one phone call to the United States Attorney's Office. She got a target letter approved by an assistant U.S. attorney named Priya Bhattacharya within 48 hours. The investigation moved fast because the evidence was already organized. Agents executed a federal search warrant on Glenn Tanaka's home at 4427 Wisteria Lane on the morning of October 3, 2023. They arrived at 6:15 in the morning, 8 agents in 2 vehicles. Linda Tanaka opened the door in her bathrobe. Glenn was in the kitchen pouring a cup of coffee. The search recovered his work laptop, his personal laptop, 2 external hard drives from his home office, 2 more from his bedroom closet, and a banker's box from the attic containing handwritten ledgers in his own handwriting, going back to 2013. The ledgers tracked, by month and by shell vendor, every fraudulent invoice he had ever cut. 612 invoices. 11 years. $1,512,483. He had kept his own books on his own crimes. Forensic accountants at the Bureau, working with subpoenaed records from Bank of America, Wells Fargo, and Charles Schwab, traced every penny. Of the $1.5 million stolen, roughly $190,000 had gone to pay down the family mortgage. Roughly $220,000 had gone to Emma's college tuition. Roughly $42,000 had gone to Tyler's medical supplies. Approximately $861,000 sat in the Charles Schwab brokerage account in untouched index funds. The remainder had been spent on routine household expenses, 2 used cars purchased in cash, and a small set of personal indulgences, most notably a custom set of Japanese woodworking chisels purchased from a specialty supplier in Kyoto over the course of 4 years, totaling $14,000. The text messages on his personal phone, recovered under the search warrant, contained no co-conspirators, no accomplices, no one else knew. The phone did, however, contain a series of notes Glenn had written to himself in the Notes app over the years. Glenn Tanaka, April 7, 2017. Tyler's pump supplies came in, covered. Glenn Tanaka, June 14, 2018. Mortgage paid, tell Linda Refi. Glenn Tanaka, August 22, 2019. PCL needs to slow down, pull DVF up. Glenn Tanaka, December 19, 2022. David gave bonus, 8. He hugged me. That last note was time-stamped at 4:11 in the afternoon on December 19, 2022. The Okamoto Restaurant Supply Christmas party had ended at 3:30. Agent Mendenhall printed that note. She showed it to AUSA Bhattacharya, Neither of them said anything for a full minute. The grand jury in the Eastern District of California returned a 38-count indictment against Glenn Hideo Tanaka on November 16, 2023. The charges included 1 count of wire fraud under 18 U.S.C. Section 1343, 34 counts of embezzlement and conversion, 2 counts of filing false tax returns under 26 U.S.C. Section 7206, and 1 count of money laundering under 18 U.S.C. Section 1956. The total exposure was over 150 years. Federal agents arrested Glenn Tanaka at the Okamoto Restaurant Supply Warehouse on Industrial Boulevard in West Sacramento at 1:47 in the afternoon on November 28, 2023. He was at his desk. He was eating a bento box his wife had packed for him that morning. Rice, grilled salmon, pickled daikon, a small container of soy sauce. He had a yellow legal pad open in front of him with handwritten notes for the November close. Agent Mendenhall walked into his office with 2 other agents. David Okamoto stood in the hallway behind them, hands at his sides, jaw set, eyes red. Kenji Okamoto stood next to his father. Glenn looked up from his bento box. He did not look surprised. Glenn Tanaka, I'm Special Agent Mendenhall with the FBI. We have a warrant for your arrest. The charges are wire fraud, embezzlement, filing false returns, and money laundering. I need you to stand up slowly and put your hands behind your back. Okay. He stood up. He put his chopsticks down on top of the legal pad. He pushed his chair in. Do you understand what I just said to you? Yes. Do you want to make any statement before we go? He looked past her. He looked into the hallway. He looked at David Okamoto, his employer of 28 years, the man whose father he had carried in a casket, the man whose daughter he had watched waltz in a pink quinceañera dress, the man who had hugged him at the Christmas party 11 months earlier. David did not look away. Glenn opened his mouth. He closed it. He opened it again. I'm so sorry, David. I'm so sorry. I don't have an excuse. Don't talk to me, Glenn. Don't ever talk to me. Glenn lowered his head. The agents cuffed his wrists behind his back. They walked him out of the office, past the cubicles where the 4-person accounts receivable team sat frozen at their desks, past the warehouse manager who took his hat off when he saw what was happening, past the loading dock where a delivery driver named Eduardo dropped a clipboard. They put him in the back of an unmarked Ford Explorer in the parking lot. He did not cry. He did not ask for a lawyer until he was already in the booking room at the Federal Building on I Street 3 hours later. When he did, the only words he said to the booking deputy were the same words he had said in the office. I don't have an excuse. We're heading into the courtroom now. If you've made it this far, you already know this story is different from the usual headline. Subscribe before we go any further. We cover the cases that get a paragraph in the local paper and disappear, and we tell you exactly how the system actually handled them. The sentence in this one is coming next. Glenn Hideo Tanaka was arraigned in the United States District Court for the Eastern District of California on November 29, 2023, before Magistrate Judge Allison Fry. He was released on a $150,000 unsecured bond, with conditions including surrender of his passport, electronic monitoring, and a prohibition on contact with any current or former Okamoto Restaurant Supply employee. His wife, Linda, paid the bond paperwork fee with a personal check. She had learned, during the 4 hours her husband sat in a federal holding cell, that the family's paid-off mortgage had been paid off with stolen money, that her daughter's college tuition had been paid with stolen money, that her son's insulin had been paid for, in part, with stolen money, that the man she had been married to for 26 years had been lying to her about money for over a decade. She filed for divorce in January of 2024. The divorce was finalized in May. Glenn retained a defense attorney named Howard Mizrahi, a 68-year-old former federal prosecutor with offices in downtown Sacramento who specialized in white-collar plea negotiations. Mizrahi did not contest the evidence. There was no evidence to contest. The handwritten ledgers from the attic alone constituted, in Mizrahi's own words, to the AUSA, the cleanest contemporaneous confession he had seen in 30 years of practice. Glenn pleaded guilty on March 14, 2024, to 1 count of wire fraud and 1 count of filing a false tax return. The remaining counts were dismissed as part of the plea agreement, but the loss amount of $1,512,483 was stipulated for sentencing purposes. The sentencing hearing was held on July 22, 2024, before United States District Judge Eleanor Whitaker. David Okamoto delivered a victim impact statement. He read from a single sheet of paper. He did not look at Glenn. My father trusted you. I trusted you. My children trusted you. You sat in our home. You ate at our table. You carried my father's casket. You stole from a business he built with his hands in this country, in a language that wasn't his, after he buried 2 of his own brothers in the war. You stole from him while he was dying. You stole from me while I was grieving. And the worst part, Glenn, the part I cannot get past, is that I don't know which of the memories I have of you were real, and which ones you were using to look at our books while we weren't watching. He sat down. Mark Okamoto did not speak. Kenji Okamoto did not speak. Linda Tanaka did not attend. Emma Tanaka did not attend. Tyler Tanaka, who was 20 years old and a junior at Sacramento State, sat in the second row of the gallery and stared at the back of his father's head for the entire hearing. Glenn was permitted to allocute. He stood at the defense table in a navy suit his attorney had bought him for the hearing. His hands shook. I have no defense for what I did. I told myself, the first time, that it was about my son's insulin. It wasn't. I told myself, the 10th time, that I would put it back. I didn't. I told myself, every year for 10 years, that I was still the man the Okamoto family thought I was. I wasn't. The truth is that I stole because I could, and because no one was going to catch me, and because the longer I did it, the more I believed I deserved to. I am sorry. I will be sorry every day for the rest of my life. That doesn't fix anything. I know. He sat down. Judge Whitaker spoke for nearly 4 minutes before pronouncing sentence. The transcript runs 3 full pages. The portion that the local press reported the next day read as follows. Mr. Tanaka, the United States sentencing guidelines in this case suggest a range of 57 to 71 months. I have considered the arguments of counsel, the nature and circumstances of the offense, and the personal history of the defendant. I want to address one thing directly. White-collar defendants frequently appear before me and argue, through counsel, that the harm they caused is somehow less than the harm caused by a violent offender, because no one was physically injured. I reject that argument. The Okamoto family was injured. They were injured in the part of themselves that decides whether to trust another human being with what they have built. That injury does not heal. You took 20 years to earn that trust and 10 years to weaponize it. The sentence of the court is 60 months in the custody of the Bureau of Prisons, to be followed by 3 years of supervised release. Restitution is ordered in the full amount of $1,512,483. Glenn Tanaka surrendered to the Federal Correctional Institution at Lompoc, California, a low-security facility on the Central Coast, on September 9, 2024. With good time credit and the Federal First Step Act earned time provisions, his projected release date is in the spring of 2029. He will be 62 years old. The Charles Schwab brokerage account was liquidated and applied to the restitution order. So was the equity in the Wisteria Lane home, which Linda was forced to sell as part of the divorce settlement. The total recovery, after legal fees and tax penalties, came to approximately $940,000. Okamoto Restaurant Supply is still in business. Kenji Okamoto now serves as Chief Financial Officer. The first thing he did was hire an outside firm to perform a full audit. This case was quiet, but the case on the right-hand side is the loudest betrayal we have ever covered. Click it now.